Good morning, everybody. Kirk Spano, Retirement Income Options. It is Monday, January 8th, 2024, the Retirement Income Options New Year's edition. I'm trying to keep simplifying things for you and make it easier to understand how we make all this money selling cash secured puts and the occasional covered call. So put up the article over on Seeking Alpha, Margin of Safety Investing. I will copy it over to Fundamental Trends any minute. As usual, we do the screening using TradingView to see what is overbought or oversold on the monthly and weekly charts. So I thought I'd put the monthly into the article this week just so you see there aren't a lot of things that are overbought. Everybody wants to talk about how the market is overvalued, which I think is arguable. I think the market is relatively fairly valued, some that are overvalued, some that are undervalued, some that are fairly valued. Of course, overvalued and undervalued are fundamental measures. Overbought and oversold are technical measures. So these are a little bit overbought. Eli Lilly, you could argue, is still undervalued. I wouldn't make that argument. I'd say they're about fairly valued. I just think they have limited upside. So I have some recommendations about trimming that. If you take a look at oversold, you will see a lot more on the oversold or almost oversold list. That is because there has not been a lot of enthusiasm for this low volume melt up that we've seen in 9 of the last 10 weeks. Last week was the first week that we saw the stock market fall in 9 weeks. And at the December options expiration right before Christmas, I said, expect a down week in the next week or two. I thought it would have been the last week of the year, was the first week of the year, and that was actually somewhat predictable because people wanted to defer their taxes to the front part of the year because they had an up year. So where do we go if we know that there's more oversold than overbought? It means we're probably going to sell more cash secured puts. So I put in here what I've got outstanding, and you can see that I actually sold a covered call on TDOC just recently. So you can do that against half of your position if you want. Our cost basis on TDOC is $18.29, so that's pretty good. And I sold some 22.50 covered calls because if it rallies up to there, I can take a quick profit and collect the premium. Invesco Solar ETF. I closed that out for a profit because I traded it. I sold it originally for 30 cents and then I bought it back for 20 cents. So that was a nice profit. It was going to expire probably, but the price started to come down and solar is very volatile. You never know. It might get back down to 45 in the next 10 days. So if you want to close this position, you can do it for about 20 cents. If you sold this a month ago, I think that's probably a pretty interesting move. Occidental, I sold puts. I got $2.49 for them. These may or may not get assigned to me. Occidental is right at $60 a share. So we'll see. If it gets assigned to me, I'll probably sell both puts and calls. Interesting move, right? So I'd probably sell puts and calls if Occidental gets put to me because the price will be really close to 60 and I can just keep selling put after put after put and keep selling covered calls on Occidental and keep getting 5% every 2 or 3 months. I can live with that. I don't know when this is really going to rise sharply, but I do have some long shares that I can hold on to for that. Ford. I'm actually at the point now where I might sell some covered calls because I have a pretty big position and I do like selling the cash secured puts. So if you're basically even on a stock, it doesn't really matter what one it is, and you think that, oh, maybe the next couple of months will be choppy, you can sell both a put and a call, collect 2 premiums. If it gets called away, so what? Sell another put, buy the shares back, whatever you need to do. Or if the stock falls, you just get more at a cheaper price, and then you can write another covered call next time stock goes up. So I think that Ford and Occidental, because they're trading in pretty narrow ranges, and the bigger upside might be a little bit more than a year out, you can go ahead and sell both covered calls against an existing position and cash secured puts and create kind of a double income for yourself. I think Palantir might be something you could do that with as well, and Square. So Square, I got $1.20 for the $75 puts. Looks like it might get put to me. We'll see. The stock has been pretty volatile. If it gets put to me, I'm A-okay with that. I think Square is way north of $100 stock in the next year or two. So I can just keep on scaling in there. Shortening up the put section to just what I'm really trading this week. So I think that that's the input I got from you is, like, what are you just actually trading? Don't give me 50 ideas. Don't give me 20 ideas. Tell me what you're putting orders in for this week. Well, here they are. These are the orders that I'm putting in. Block, I'm trying to sell March puts for $3.50. Ford, I'm trying to sell at $12 puts for 60 cents. I think I can get both of those. We take a look at Ford. You actually can get 72 cents if you sell the March $15 puts. So that's pretty nice. Square, what can we get for Square? Let's see here, $65 mark. There you go. Sure enough, $3.90. You get $3.90 for that. That's pretty nice. Stock would have to go down in price for it to be assigned to you. I think it probably goes up. Then you just keep the premium. I have a Square position. You know that. So this is something that if you don't have a Square position, I'd at least get a starter at the current prices. Paramount, it's for sale, so I want to keep selling puts on that because if it goes up, I just get the income. If it goes down, I'm buying something that's probably getting bought out. Pfizer, I like that. $30 for $2 on the March puts. You'd be getting 6.5%, give or take, on a stock that looks like it bottomed out. And as Shooter and I talked about over the weekend, just like the whole sector, I think biotech is and biopharma are really going to benefit from AI. So I think that you can do pretty well there. So here we go. Pfizer, March 30, $1.65 you can get right now. That's about almost what you need. I'd look for a little volatility because it did rally up a little bit. I think you can get the 2 if you just make it a good till cancel order. Warner Brothers Discovery is trading at almost 12, but you can still sell the April 10 for 50 cents. It's another one where I think you should have a position. Then the iShares Global Clean Energy. I'm starting to pivot to this one from PBW because this is just much more widely held ETF. It makes for much better option strategies. I still have PBW in the 401k, but I do think I'm mainly going to use iClean going forward because I can just keep selling puts on that. You know, that's my thing. So I will keep doing that. Covered call strategy, same as last month, same as a couple of weeks ago. Caterpillar, I tell you what, I'd take some profits. Great company. I think it's probably a little overvalued. And there's just really limited upside based on what the cash flows and revenues will be over the next couple of years. So as awesome as they are, this is one where you should employ the technical indicators, and I think probably you can take some profit if you got it. Same with all of these. Square has pulled back, so make sure you look at that. I already mentioned that. Palantir is choppy, and I like it long term, so trying to figure out what my option strategy is here. I might sell like $17 covered calls and $16 cash secured puts. We'll talk about that next week. We'll see what happens. I have a pretty good position in that. All right, any questions? Here's iClean. So you can get over 5% on the April 15th, $15 put. So 5% for 3 months. Not super sexy, but pretty sexy. It's still annualized at around 20%. And if it dips, or actually if it doesn't go up, you know, you get it at a net cost of $14.15 plus commission. Pretty quick, not a whole lot else to say. I think the world is looking pretty good, and I think last week's selling is probably roughly done. I think that most folks who wanted to defer their taxes into 2024 did it, and now we're just waiting to see what else happens. And people want to be breathy and worry, but tell you what, I think everybody knows that liquidity is coming, so we'll see what happens. And obviously, everybody's waiting for Bitcoin. One of the stocks that I'm looking at, we're selling options, and I might put out another alert, but I'm trying to figure out what to do with Marathon Digital. I will consult Shooter. I really like the Bitcoin exposure here. So you could sell $25 put and get like $5. I mean, that's pretty good if you are bullish on marathon, and I think I am. So I'll probably sell these puts. I want to read up a little bit more before I make that commitment, though. All right, any questions before I tap out? Going once. Where can I find the bottom fishing prices now? Well, they're going to be on the very short list. I just haven't got there yet. Go ahead and take a look at the recent articles. You have something specifically you want to look at? Search the article list in your service. So if you're at margin of safety, just go to latest articles, search for the symbol, pick whatever you want. You'll find the information in there somewhere. You can do the same thing at fundamental trends, right? But the very short list, I've updated it, and putting in fundamental bottom fishing prices and all those is not a quick, easy chore. That's doing discounted cash flow, discounted free cash flow analysis, looking out 5 years, not the easiest calculation. So when I get them in there, they'll probably be about right. All right, well, have a great day. Sell some cash secured puts and use up that cash in your portfolio, at least most of it. All right, take care.